Nairobi-based Stanbic Bank Holdings has been operating in the East African region and in countries such as South Sudan for just over 10 years now. Well, East Africa has been a lucrative market for the bank in the region before hyperinflation and, of course, issues such as political instability rocked the country. Now, the bank also has operations in Uganda, Malawi, Nigeria, Zambia, and others. Well, joining us to get further into Stanbic Bank's performance this year and, of course, its outlook for the region is Regional Chief Executive Patrick Mweherie. He joins us now via Zoom. Great to have you with us on the show, sir. Well, let's get into it. Now, we know regionally, most financial institutions that operate in East Africa, they seem to be shrugging off the effects of the COVID-19 pandemic. We've seen them posting stronger earnings, and that's despite a slowing economy across the continent. Give us a snapshot of the bank's performance in the region so far, and certainly more insight into how these uncertainties are coloring your outlook.
Well, thank you for the question, and thanks for having me this evening. I think if you want to look at the performance, you must understand the macros. One of the more important and encouraging things about East Africa is, one, it's a very connected region. So we trade amongst each other a lot more than you would see in other regions across the continent. And that allowed for the resilience to come back when the pandemic stopped. In addition, I think the coordination on the monetary policy in terms of how the central banks have been able to deal with the issues that we faced in terms of increasing rates as they're doing now, coordinating that across the region has also been quite useful. So that stability, that macroeconomic stability. I might add that there are some challenges. There are some fiscal challenges. Obviously, the pandemic did shrink the fiscal pie, and there's a lot of things that we need to catch up on. But that stability alone is enough to bring back the economy. The other thing that we sorted out this year was to get, Kenya, which is a bellwether economy in the region, to go through a peaceful election and demonstrate such political maturity. All of that brings in a pretty good earnings story. For the bank, we've been up, on a revenue line, 15 to 20% so far, year to date. And at the bottom line, we're going to be close to 35%. So very, very strong momentum. We saw a lot of industries come back, a lot of confidence levels go back immediately after the election as well in Kenya. And while some sectors are limping along, the resilience in terms of what the business leaders believe has been quite encouraging. They continue to invest. And obviously, as one of the largest banks in the region, we are trying to be present to support those dreams and aspirations.
Now, we'll get further into the challenges a bit later, but let's just touch on your strategy, because your plan for the region seems to focus, or rather center, around the expansion of small and medium businesses in the region. So what really then would you say is your strategy for the region?
I think, again, you don't have to be a rocket scientist to believe and to understand the economic opportunity that lists with the SMEs. They employ 70% of people in the region. They contribute, close to 40% of GDP. They're the largest job creators, and they're also the largest in terms of growth. We'll continue, obviously, to pay attention to multinationals and large corporates. But at the end of the day, it's those SMEs that are the engine of growth. So one of the things we're trying to do right now is to understand how to make those linkages, both across, between the corporate client and the SMEs, but also regionally, and how to support them. What do they want? They want some trade products. They want financing quickly and easy. They want, affordable financing. They want, guarantees, etc. All these different products. So we're trying to basically work on that to ensure that SMEs continue to grow, because they are the future. There's no doubt in my mind that they are of East Africa.
And quite interesting, we saw you launch what you call the borderless banking solution. You launched that in January last year, and it's been quite important for cross-border trade in the East African region. It basically allows clients to access their accounts and also transact in real time. across the region. Give us an update on the progress of that so far. Of course, with the launch of the AFCFTA, we're talking a lot about cross-border trade. How is this contributing?
So we've, year to date, this is a new product and we've already run about $400 million worth of transactions. The connectivity between our banks was really important for clients. Clients wanted to have the flexibility to go into Juba and deposit money into a Stanbic Uganda account. I mean, that level of flexibility and real time at a decent commission, or, we charge less than $2 for that trade to happen. But what we started to see that we were enabling trade in a huge way. We were also helping de-risk for some of the fuel traders that were carrying bulk cash, or even agriculture traders that would come and sell their produce in Kenya, get that cash in Kenyan shillings, convert it into Uganda shillings, and then drive it across the border in the middle of the night. They don't have to do that anymore. As soon as you get that cash, you can deposit it anywhere in our Stanbic footprint, which is quite sizable across the network. So we've also seen it make us more efficient because there's a lot of cash that was moving around the region. And we had to continue to expatriate that cash, bring it back, expatriate it, bring it back. But now by sort of digitizing it and democratizing how you operate in the region, we've also seen that our costs have come down. So we have happier customers, we are more efficient, and we have more connectivity. And we'll continue to come up with these types of solutions to serve our clients. So they're very, very happy with borderless banking.
All right. Well, on that note, let's talk about the challenges that you're facing in the financial sector in the region, because we do know the current economic realities on the ground. They're forcing banks to rethink how they operate their business. So what are the challenges and also the opportunities you expect to impact the sector going forward?
So, obviously, the challenges we always face are, that we have these macro headwinds that we're going through. Right now, we have a high interest environment. It's a tight monetary policy, so we have to operate in that space. We obviously still have the reeling effects of COVID. They haven't completely gone away. There were some moratoriums that were given, but there are some industries, tourism being one of them, hospitality, etc., that we have to continue to hold the hands of the clients to make sure that they come out of this untouched. But 2 years of huge impact has definitely had, some effect on some of our clients. We also have, obviously, what's happening in terms of the depreciation of the currencies across the board with a high interest rate environment in the US and importing that inflation into the country. So we're having to deal with huge cost inflation, regardless of what you're doing. So managing that revenue growth, cost inflation that you're facing, much of which you can't control, is a huge challenge. Then you have the regulatory risks that we always face as banks, whether it's local, regional, or even foreign, AML, CFT, all the things that make it hard to operate in the sector. So those are things that we'll continue to navigate. But having said all of that, I think we see a huge opportunity in East Africa, even without oil. And we know that oil is coming in Uganda, gas is coming in Tanzania. We're still seeing some really resilient GDP growth rates, 4 to 5%. We're seeing an economy that doesn't, effectively produce any commodity, showing some really good growth across many sectors. And then we have that dividend and the oil and gas that was in Tanzania and Uganda. And again, the connectivity, I can't emphasize that enough, that brings that multiplier effect because we just trade amongst each other. Just think about the pipeline between Hoima in Uganda and Tanga in Tanzania. It's more than just a pipeline, it's a real trade corridor. There's a reverse gas pipeline that's being talked about. And these are large infrastructure projects, but the impact they have on the economy is just significant. So we're really looking forward. We think that the East African community GDP will double in the next 3 to 5 years. And that's, without really kind of being aggressive about the growth. That's just doing the numbers, the simple numbers, and seeing how they trickle down. So as a bank, we'll continue to stay focused, making sure that we support our clients and also be a part of this growth story. But on the positive, I said on the whole, it's a much more positive story.
Well, certainly an encouraging outlook there, Mr. Muhire. Thank you so much for joining us on the show today. That, of course, is Regional Chief Executive of Stanbic Bank East Africa, Patrick Muhire, joining us there.